The following program is sponsored by Awesome Nossum Real Estate and Dan Keller. This is Seattle Real Estate Radio with your hosts, Christian Nossum and Dan Keller, mortgage expert with New American Funding. For the next hour, you'll learn impactful insider information as Christian and Dan teach about the ins and outs of Seattle's real estate market. Now, here's Christian and Dan.
Hello, and good afternoon, and happy Monday. This is Seattle Real Estate Radio here on KKOL 1300 AM, which happens to be the Wall Street Business Network. I feel like I have to go super low when I say that. Wall Street.
I kind of feel
Business
dirty.
Network.
Wall Street.
Wall Street. Yeah, we don't.
Wolf of Wall Street.
We have nothing to do with that.
No.
Yeah. But
What's up?
yeah. This is going to be a fun show. I'm kind of excited about this one.
It's going to be a great show. But before we start, I need to introduce myself.
All right.
I need to talk about my MLO number like we
Yes, you
always
do.
do. Hey, listen, I've got, our industry is super, super regulated. So
Just a tad.
I am going to introduce myself. Dan Keller. I am a mortgage advisor at New American Funding. My MLO means Mortgage Loan Originator's number is 115349. Done.
Boom.
Take it away, Christian.
I am Christian Nossum with the Awesome Nossum Group at Wilson Realty, and I'm a Seattle real estate agent. And,
You are a top 10 Seattle. Get it, buddy. Acknowledge
I don't
it.
like promoting myself.
No,
too
I will
much.
then. I will. Christian was actually recently in, in the news.
Yeah.
Ranked in the Seattle market. I know I talked about this last show, but I'm going to
know.
talk about it every week. It's kind of cool, man. Christian was ranked as one of the top 10 real estate agents in Seattle. Now, the really neat thing is number one on that list. I don't know if it has any bearing on who was number 1 through number 10, but number 1 was actually a large real estate firm that we all know. I'm not going to give them credit on there because they don't need credit. You need credit.
I need credit.
It's Awesome Nossum's on the list. Top 10. Big accomplishment. You deserve it. You're the best anyways, so.
Yes. Thank you, Dan. I appreciate that.
Yeah.
I don't like talking about myself. It's just
I do.
Yeah, well,
I like
good.
talking about you, so we're good.
Good. That's cool. That's why we're a team.
That's why we're here, baby.
So today's show is
Yeah.
all about condos. So condos are a huge deal. Lots of people obviously enjoy living in condos, are looking to buy condos, want to know more about condos. So that's what we're going to do today. We're going to teach everybody what you need to look out for when looking at condos and not just the structure.
If you're in the market to purchase a home and condos are on your radar or townhomes, or if you have a condo or townhome, I don't even care if you're thinking about selling. This is an important segment.
Yep.
Yeah, you're going to learn a lot. I used to cringe. I'm not going to kid you. I would probably say 2 or 3 years ago when somebody would come to me and they wanted to get pre-approved and then they would say that they're looking at a condo or I would cringe because it was so after the market crashed, guidelines were just cinched tight on lending guidelines on purchasing condos because the market boomed in the early 2000s, mid 2000s, and then it crashed. And the first segment of the housing industry to crash were condos.
Yep. And that was because, so condo values are tied with every other unit that is pretty much exactly the same, just like your unit if you own one.
Yep.
Your unit is probably the same as the one right above you and right below you. Same floor plan, interior is essentially the same, maybe a little upgrade here and there, but they're pretty much all the same. So if one condo value goes down, so if one person stops paying their mortgage or they have a short sale and the price drops, they just brought everybody else down.
Yeah.
So that's why they went down in price so fast compared to homes, single-family homes, or even townhomes for that matter.
Yeah, Christian, I had people calling me, so I got in the mortgage industry in 2008, end of 2008. I had people calling me for help, mortgage help, thinking that I could help modify their loan, which I never did loan modifications. But people would say that we bought a condo for $300,000 and it's worth $150,000.
Yeah.
So they're like, we can't
do anything.
We can't sell it.
Yeah.
So what do we do? And unfortunately, they were in a pretty rough situation. It was either a short sale or a foreclosure. Or very few lenders wanted to negotiate when they were $150K upside down on the loan. So
exactly. So first off, why don't I just kind of lay out? We always kind of do this. We kind of overview, and then we start to break down what we're actually going to talk about, and then we kind of go to the next level of in depth, if that makes sense. Yeah. So kind of some 101 stuff. What's the difference between a condo and a townhouse? You want me to take that?
Take it. Take it.
So a townhouse, generally in Seattle, and this is the Seattle area. This is not East Coast where it's a totally different definition. But here, generally what a townhouse is, you go to Ballard, and it's a perfect example, left and right. You look where there used to be one single-family home that was just a little kind of crappy house. They tore it down. They put 4 townhomes up in its spot, and each townhome, usually there's 2 in the front and 2 in the back. This is pretty general terms, but that's how they were usually set up. 2 in the front, 2 in the back. They share one wall in between the 2 front units. There's one wall shared in between the 2 back units. That is a townhome. They're usually 3 stories tall, garage, and maybe a small bedroom on the main floor. Main floor, or on the basement floor, I should say. Main floor generally had the kitchen, living room, and a half bath. Upstairs, usually 2 bedrooms, a bathroom, or 2.
Okay.
So that's pretty much what a townhouse is. Condo, on the other hand, is essentially like an apartment that you own, if that makes sense. We can go next level and say what's a co-op. A co-op is essentially the same thing, other than the fact that it's completely different.
Yeah. Answer.
Yeah, it's a true answer, but it's a ridiculous one.
Yeah.
But a co-op is just, I don't usually recommend them. They're usually pretty inexpensive, but there's a reason for that. They also don't go up in value very much,
they're very difficult to finance.
Extremely difficult to finance. So. They're very unpopular, and there's not very many, very rare.
I was going to
ask them in Seattle.
You see any?
No, they're here and there, mostly Capitol Hill.
Okay.
First Hill, Capitol Hill. I think there's 1 or 2 buildings in East Lake, but there's really not very many co-ops.
Yeah, I've got some friends on the East Coast, New York area. Big.
Well, that's all they do over
there.
there.
Yeah.
And then, kind of what happened and why they became a thing there was that's the only way they could figure out how to make it work for them back in the day. But we're usually our laws and when I say we, I'm saying West Coast. How we set things up is usually we learn from them and we go, your way sucks. We're going to redo it and make it more smart.
So essentially a co-op is a dwelling that's maybe possibly attached to a commercial or industrial building. Yes? No?
No, not necessarily. It could be just like looks like an apartment building or a condo building, a big, not skyrise necessarily, but large complex with multiple units, 20, 30 units, something like that. Sometimes more, sometimes less, but in general. And instead of actually owning like you do with a condo, so with a condo, you actually own from the walls in. So your unit walls in, you physically own that. In a co-op, you actually just own shares in the co-op.
Got it.
And that's why it's hard to own, or why it's hard to finance, because you have to find a lender that does that. And there's just, I think there's 2 in Seattle that do.
You got to put down a bunch of money, and the rate's not great.
They're not great. Values don't go up. I don't see it as a great investment. If someone's going to live there forever, go for it.
Yeah,
but you're not going to make money.
So let me ask you this: going back to townhomes and condos.
Yeah, I'm sure that said a lot.
Townhomes and condos.
Yes.
Okay. Detached, attached.
For townhomes, is that what you mean?
Yeah. So
what's the difference?
So does being attached or detached define one or the other?
Generally, a townhouse is attached, and they might say it's a detached townhome, which just means there's no shared walls. And I see that as more of just a definition of explaining what it looks like, more so than it being any sort of legal or even a different way to get financing.
See a lot of those up north. They're called zero lot line.
Yep, zero lot line townhomes.
So they're considered a condo, but they're actually unattached.
Yeah.
So easier to finance.
Yep.
Because FHA doesn't care.
Yep.
So, okay, good. Great intro on condos and townhomes. So, so then as far as, I want to talk about this real quick, man.
Okay.
Lots of people coming to the Seattle area.
Yeah.
Where in the heck are they coming from?
So a report just came out last week or 2 weeks ago now. Maybe it was 2 weeks ago. That out-of-state buyers, they're coming from L.A., Phoenix, San Diego, Portland, and Chicago, which a couple of those stood out to me. So L.A., everybody knows that everybody from California usually moves up here because you can basically buy cash compared to what you can get down there. Phoenix was interesting because their market, real estate-wise, is not very good. I mean, it's getting better, but they went way down in values. Portland, that's always interesting. I mean, everybody, Shannon's actually my wife. She's from Vancouver, Washington, which is right across the border from Oregon, Portland area. And we always joke about it being the kind of the next step going up I-5 from Portland to Seattle. So that's interesting to see that on there. And then Chicago, that could be big. If we get a big influx of people from Chicago, that could really be big for Seattle. And then from in-state, people from Snohomish County, Pierce County, Spokane County, Clark County, and then Kitsap County. That's kind of the order that they're coming in. So
wow,
pretty interesting.
Cool stats, man. Those are. I know a lot of people are coming up from California right now. Texas, I'm surprised Texas did not make that list.
No, that surprised me too. Austin, there's a lot of people that move from there, especially tech buyers.
Speaking of tech, we just did a commercial for our radio show, and you mentioned in that commercial, you need to know, as a seller, you need to know who your buyers are. Yeah. And who are they?
They're usually techies that are generally millennials. So as a seller, you need to know how to market to that buyer so that they want to buy your house. Yeah, that's big. I know them. I work with them all the time.
Yeah, you're kind of techie anyways.
Yeah.
Tech. Hey, Mortgage Minute. Excuse me. Real Estate Minute. We got to get to that before we go to break.
Quick tidbit. Yeah. Did you know Seattle wanted to build a floating football stadium on Elliott Bay back in the 60s?
No, that would have been cool.
That would have been cool.
That would have been like outside of the box.
Way outside the box. So right after the World's Fair, Seattle had a plan to build a floating football stadium for a team they didn't even have yet. And it would have only cost $22.4 million. Unfortunately, voters said no because, one, they didn't want to fund it. Two, they didn't know where they were going to have 7,000 parking spots in that location. Yeah, exactly. So a little logistical issues there. But I thought that was pretty cool. I saw that on Curbed Seattle this week or last week. That was pretty neat.
Well, with all these innovative billionaires out there building stadiums, that would be a pretty cool idea.
That is a pretty cool idea.
Yeah, that'd be neat to see happen.
Maybe they'll do that in San Diego.
Yeah.
Although I guess they're not having a team. So it's going to be in L.A. then. But, yeah, they're not doing that there.
Thanks for the update, man. That is a did not know fact.
It's just a little fun. Good stuff. So, speaking of sports, baseball's coming up, man.
We're going to opening day.
Are we?
Yeah, I haven't heard back on the suite, but we're going to opening day.
All right. So, opening day is April 4th against Texas in Texas. Mm-hmm. In Seattle, it is April 8th, just for those who want to know. So, we need to take a quick break. After the break, we are going to have Tiffany Palumbo from American Family Insurance talk to us about condo insurance and why that's such a big deal and something you need to know about. So stay tuned. Seattle Real Estate Radio.
Time for more Seattle Real Estate Radio with your hosts, Christian Nossum and Dan Keller.
All right, so we are back with Seattle Real Estate Radio on KKOL 1300. Just a reminder that we're here every single Monday at 3 o'clock.
From 3 to 4.
3 to 4, and we talk about what's happening in real estate and in the mortgage markets, but more specifically, we just kind of keep you up to speed with what's going on because it's moving pretty fast right now.
And we also like to bring in guests that educate you on different parts of the process of owning a home.
Yeah, every week we bring in an expert, a pro, which brings me to this week. So this week's segment is all about condos. Mm-hmm. You know, you talked on the before we went to break about how many people are coming to Seattle right now, where they're coming from. But a big part of those people are looking at condos because the housing market is growing so fast and kind of...
Well, a lot of tech workers, too, they want to, and that's where most of these people that are moving to Seattle are, a lot of them, you know, they want to live downtown. They don't want to deal with our really horrible traffic. Yeah. So where's the most density you can have is in an apartment or a condo downtown.
Yeah, and with rents right now going through the roof, it does make sense. Yeah. So I'm excited for today.
Yep. So today we got Tiffany Palumbo is a resident insurance agent in the state of Washington with American Family Insurance. She is the owner of the Tiffany Palumbo Agency. She has a master's degree in business and has been protecting her clients' dreams for over 5 years. As a mother and a wife, she understands that protecting your family from risk is very important. I would agree with that. Mm-hmm. Her consultative approach, that's a hard word to say, but I did it somehow, helps to assess and accurately protect your family, leaving you with peace of mind. Thank you very much, Tiffany, for coming in today.
Welcome.
And
Thanks for having me.
and educating us, showing us the way.
She's educated me. I mean, Tiffany is, in my opinion, she is a condo expert.
Yeah.
She's written policies for our clients, and we are going to drill you on condos for the next few minutes.
So we're going to start kind of 101. This is what we always do. Kind of start off with the easy, basic questions, make sure everyone's on the same page, and then we're going to go a little more in depth. So how does condo insurance differ from a regular kind of single-family detached home insurance?
That is a great question.
Good.
I think the main...
You can thank Shannon. She came up with it.
I think the main idea that you're really trying to understand is that whenever you're buying a single-family home, your HOA is not involved in your insurance process. Whereas with a condo, it is. You're sharing that liability because you have common structures at play.
Yeah.
So it's really important that you get in touch with your HOA and understand the bylaws and the coverages that they have in place.
Yeah. No, I would totally agree.
So Christian, when you list a home and you're talking to it, you ask the seller, what do you ask them for? Their HOA docs, their resale cert? What are some of the things?
So as a seller, you have to provide a document called a resale certificate to the buyer. Well, the buyer has to order it and all that stuff.
Yep.
In that document is where all of the homeowner association bylaws, rules, regulations, that's where you're going to see the master policy, which I'll go over that. All those types of things are going to be within that resale certificate, as well as budgets, meeting minutes where you can tell if there's been issues or potential issues on the horizon that they need to repair, all sorts of things.
So
like
before Tiffany talks about HOA and certain insurances, for somebody listening that doesn't understand another acronym that we talk about, HOA, what is an HOA real quick?
HOA stands for Homeowners Association. Okay. So when you're in a condo, let's say that there are 100 units in the condo, just for simple math. So there's 100 people. They all share the same building, yet they own a unit, a little apartment, a condo within that building. So there are rules in place to determine how things are run. There's a structure in place to explain, hey, if this happens, then we do this. If this happens, then we do this. If we all need a new roof, here's how we pay for it. It's all dictated in the Homeowners Association rules and regulations. They call them CCNRs.
So that's what the HOA dues then contributes to.
That's why you pay monthly dues, because if you own a house, you can just save money and go, okay, well, I want to replace my roof in 3 years, or if it ends before that, I'll do that, but I got to save for it. Just like a homeowner association, they have to save for it too. So your dues go towards a bunch of common interests and common area maintenance. So for a condo, that homeowner association needs a master policy. So why don't you quickly, kind of Tiffany, condo expert, insurance person galore, Tiffany Palumbo agency, why don't you quickly explain what a master policy is so that people that are looking at potentially buying a condo, maybe there's a couple things they know to look for.
Yeah, the master policy is basically going to define the coverage that the HOA is providing for you. As a homeowner. So it'll basically have the limits in terms of the actual structure limits that they're covering, as well as if they have any liability associated, what kind of coverage that's providing.
I'm sure that increases if there's a pool or not, or if there's elevators or not.
Community buildings, that sort of thing. As well as it's going to tell you whether or not they have coverage for earthquake or extra optional things that sometimes certain homeowners association may elect not to cover. So
in order to save money potentially.
Yeah,
but
exactly.
You get less coverage, so it's always that trade-off.
Correct. So, I mean, especially when you're investing in a property, you want to know exactly how the other partner or HOA is protecting it so that there's no gaps in coverage.
Cool. That's a great answer. That simplified that process. Yeah. So if I owned a condo, there's the master policy that kind of covers the exterior, well, not just exterior, but the building and the amenities and kind of the liability side. Do I need my own policy in addition to that if I own a condo?
Absolutely.
Okay, and then what is that called, and what does that include?
So what they usually refer to is a walls-in policy is what they expect you to have. What that's covering is basically the real property inside the structure. So, for example, if I were to define that, that would be the decorating, so finishing paint, wallpaper, paneling, floor coverings, cabinets and countertops, plumbing and electrical fixtures, built-in appliances, or any upgrades that you may make to the condo unit afterwards.
Does that usually cover from the drywall in, or would it be from like the paint in, or how specific does that get?
That's why you need to get the coverage documents, because it will specify that in the bylaws.
There you go.
Whether or not, in case of a loss, if it's going to be rebuilt to original construction, therefore not covering some of the upgrades you may have installed. Yeah. So that's why it's
this
important.
Is huge. You guys, I mean, Christian, you know this, and you take the same approach I do, and so does Tiffany. But when you're selling a condo to a client, these are things that need to be addressed, especially, you know, a lot's changed in the mortgage lending arena. And now they require an HO6 policy, this walls-in coverage. But understanding what the master policy covers, and what I was talking with Tiffany about earlier, was look at what the deductible is on that master policy. It could be, you know, $50,000, for example, if the condo complex or building was destroyed. Holy cow. Yeah. I mean, I know a lot of my clients don't, because I see their bank statements. You don't have an extra $50K sitting around to replace the inside of their condo because their neighbor left their stove on.
Rebuild the entire thing.
Yeah,
this
is big.
So yeah.
So
how about this? Does who should be the one that actually looks at the master policy to understand and help someone that is buying a condo? Is that you?
Yeah, your agent. They're going to be the one that's most educated to understand the coverages that are already provided.
And that, my friends, is why you need to work with someone that really understands condos.
Yeah.
I was trying to frame that question in that way. So
and like Dan was mentioning about the deductibles, there's also a difference in terms of the regular deductible versus loss assessment.
So explain what's loss assessment.
So, for example, most policies only provide either $1,000 to $2,000 for loss assessment coverage. If your HOA's policy, like you just said, has a deductible of $50,000, that $1,000 or $2,000 isn't going to go very far to help pay for that deductible. A loss assessment is basically defined as something that happens to the common property, a loss of some sort, and where the owned members are collectively assessed the deductible, spread out amongst them.
If it is a $50,000 deductible, everybody in the condo, they have their own
portion of it
that they
to
owe.
provide.
Yep.
Correct. So there are endorsements available on an HO6 policy to increase that coverage for the loss assessment, whether it's $10,000, $50,000. So that's why it's important to know the HOA's deductible and make sure you have that endorsement to cover that.
Yep. So the HO6, is that what it's called?
Yes, correct.
HO6. So HO6, that's basically jargon speak for the walls-in policy that a homeowner or condo owner needs.
Correct.
Got it.
And so many real estate professionals. I'm going to take this time to kind of go off on a little rant.
Go for it, Dan.
If you're a real estate
never do
agent,
this, so this will be the first time.
But here's the thing. If you're a real estate professional, don't leave it up to your lender to have a great insurance professional to work with. Reach out to Tiffany. Build a relationship with Tiffany. You want somebody like her in your corner. Every time I call her, she picks up or she texts me back right away.
Yep.
You want somebody like that. It's important because she just said it's your job to review the master policy, the resale cert. You need to be doing that. I can't tell you how many times I've funded mortgages for real estate agents, and they, in particular, one had me actually go pick it up. Wow. It's ready for you to pick up, and I'm like, oh, you want to go get that and review it, and then maybe get it over to us? No, it's ready for you to pick up. And he was working with the buyer. And so, it's just, you guys, this is so important, understanding what goes into this. Again, it's the largest financial decision of someone's life.
Should probably hire a professional.
Make sure you're working with a pro.
Yeah. Somebody that's good.
Yeah.
So I know when the real estate market crashed, there were some condos that kind of went downhill. The associations didn't have any money because no one was paying not many people were paying their dues.
Yeah, they were in default.
Exactly. Yeah. So now, though, are there still condos? Well, are there ever condos that are in such bad shape, either financially or physically, that you just cannot get insurance?
There's actually two answers to that question.
Oh. Yes and no?
Well, it depends on who you're looking at. Are you looking to insure the actual homeowners association itself or just the unit owner? Because essentially, if you're just looking at the unit owner, you're only covering that walls in coverage. So therefore, the condition of the property is not going to really come into play with that walls in coverage. However, if you're looking at the homeowners association, absolutely. How much they have in reserves is part of that risk tolerance. Yeah. So if they don't have enough in the reserves, they're not keeping up with the property, it's most likely they're going to get a fix-it ticket before we're able to insure them.
Wow.
So, that makes sense.
Yeah.
Well, we got to take a quick break. After the break, we are going to hear more from Tiffany Palumbo.
Yeah. It's going to get
our
good.
condo insurance expert. And Dan is going to ask her some very good questions. So stay tuned to Seattle Real Estate Radio.
Seattle Real Estate Radio with your hosts, Christian Nossum and Dan Keller, continues after this. We're back with Seattle Real Estate Radio with your hosts, Christian Nossum and Dan Keller.
Hello, and welcome back to Seattle Real Estate Radio here on KKOL 1300 AM. We are here with our resident, not really, but I'm going to call her that anyway, our resident condo insurance expert, Tiffany Palumbo of the Tiffany Palumbo Agency. She is teaching us all about condo insurance, and it is a very complex, multi-layered issue that you really, if you're going to buy a condo, you really got to understand it.
You know, it's another professional that's joining us that's just reconfirming to us and to everybody else listening that this is the largest financial decision of your life, and you need to make sure you're working with a pro. You need to make sure that you understand the ins and outs because look what happens if you don't.
If you don't, you can really get...
So, Tiffany, I get this asked all the time from clients during the mortgage approval process. Well, as it relates to a condo. Well, I already have insurance with my master policy, so why do I need this additional coverage? I think we've kind of talked about that.
Correct.
But this is I want to use that to kind of segment back to the HO6. Review with our listeners exactly what an HO6 policy is and what it covers. But before you do that, I'm going to let everyone know that it is required. If you're financing a home, the guidelines changed with Fannie Mae and FHA in, I believe it was 2013. Don't quote me on the actual year, but it was around 2012, 2013, where they required all borrowers, regardless of what you put down, to have an HO6 policy in place on top of.
Why wouldn't you want that anyway?
And that was when that guideline came out. That's what I wrote a blog. I wrote a blog on it. Why would you not want this? But here's the thing: it wasn't required. Nobody knew about it before, unless your agent brought it up.
Unless you had Tiffany Palumbo.
Well, it was a huge gut check for me. Check this out.
Right,
it was a huge
There's
sucker.
other people that know what they're doing, too.
Well, but think about this. It was a huge sucker punch for me because I'd funded condos prior to that, and I didn't even bring it up to my clients. I didn't know.
Yeah.
And you say, well, why wouldn't you? I didn't know.
Yeah. And I think that's and that's something that as we all become better experts as time goes on, we learn more and more.
Yeah. So explain again what the HO6 mandatory policy is if you're financing a home. Explain what it is and what it covers again.
So basically, the major component, like we've just talked about, is the walls and coverage. So the actual inside property cabinets and everything. Additional components would be your personal property.
Yeah.
I mean,
so it's kind of like almost like a renter's insurance where you're insuring your stuff, but in addition to that, you're insuring the cabinets, the countertop, the appliances that are built in.
Yep.
Well, it's crazy to think that if something were to happen, my countertops are not insured,
right.
or my hardwood floors are not.
That's true, though.
My stainless appliances.
It's the truth, and that's why it's important.
The master policy may cover those things, according to the bylaws, you might be slammed with a large deductible, like we talked about, or liability. Liability component is part of your HO6 policy to cover you for liability issues if you own a dog, if you've got kids, and they're acting crazy and something happens.
Kids never act crazy.
Right?
What are you talking about? Never any injuries or issues with children.
Got it. So let me ask you this. Bathroom fixtures. If countertops don't matter, I'm talking nice tub, toilet. You're on your own for that as well, right?
Correct.
Okay.
Yeah, any upgrades?
It's basically the shell.
upgrade?
The master
Yeah.
policy covers the shell of
Yeah.
the building and the interior walls. That's about it.
Okay. Well,
Like
and
the
then
studs.
another name for this HO6 policy is actually called "quote unquote" walls in.
Yeah.
Correct.
Okay. Good.
Correct.
Okay. So this is huge to understand.
Well, that's why we keep pounding on it, and it seems like we're saying the same thing over and over again.
Mm-hmm.
But people just don't understand, and they need to understand that. I mean, so let me ask you this question. I'm totally hijacking your segment, Dan.
Run
But
with it, man.
so explain kind of the cost of what a average walls-in policy really costs. I mean, they're not very expensive.
No.
It's not much more than a renter's policy, correct?
Well, there is additional. I mean, obviously, because you're covering
the
structural
cabinets and-
components. But it just depends on what you're buying.
Yeah.
Too. So, I mean, some systems are just as sophisticated as rating off of census blocks, crime in the area, claims in the area type thing. But it is still, yes, very affordable. I mean, like you just said, why wouldn't you have it?
But compare a walls-in policy to a single-family home policy.
Correct.
It's going to be
yes,
way less
much
expensive.
Correct.
Yeah.
Yeah, because you're sharing liability and the
Yep.
coverage for the structure.
Yeah.
So
So it's really, I mean, if anyone has renter's insurance and they're looking at
Yeah.
buying a condo,
Yeah.
it's
easy to
not
transition,
much more
correct.
than that.
Yeah.
And it's not as big of a difference in price.
Well,
compared
here's
to a
something
townhouse
that
or a
but
single-family
here's something
home.
that may add to that. So what was this? 6 months ago, we had this huge scare about, not scare, but a lot of conversation took place about an earthquake or tsunami
Yeah.
hitting the
the
Northwest.
New Yorker article.
Yeah, the New
Yep.
Yorker article. Talk to us a little about earthquake coverage as it relates to that condo. So whether it's covered
Yeah.
under master or is that a part of the HO6 policy?
Nope, it's always optional.
Okay.
So
neither?
Neither.
Wow.
Neither.
Yeah, it's a whole nother
It
layer
is-
that a condo
Even with a
association,
condo.
Correct.
condo
Wow.
association
Correct.
chooses if they want to have it or not. So that's why when it's on the MLS as an agent, it actually is a separate field that says your homeowner dues include water, sewer, garbage, earthquake insurance,
Nice.
and other random things.
Sure.
But
Okay.
it's an actual another layer that the
Yeah.
association can choose to do. And there's
Okay.
you tell me, but
Yeah,
they're-
whether
they're-
it's a separate policy or an endorsement, it
Okay.
is something that has to be added.
So I'm seeing a
policy.
lot of people asking questions about it. What does that entail? What does it cost? What does it cover? What does it entail to get earthquake coverage
it's
on a
super
condo?
not cheap.
Yeah.
Well, that depends.
Yeah, I guess that's a good point.
Sometimes
Yeah.
it can be actually very affordable if it's an endorsement on the policy. That makes a major difference
Okay.
because you're not going to another carrier to take out a separate policy. Therefore, it can be more affordable because it's attached to your main policy. However, a lot of people don't understand there is a different deductible association. It's not a
additional-
monetary amount. It is a percentage amount, and it's
Okay.
always a percentage of your dwelling A coverage.
Got it.
So people
That's
have to
important to know.
understand,
Yeah,
yeah,
that's good to know,
correct,
too. I
as
didn't
well
know that
as your personal property. Again, in that unit, with an earthquake, everything's shaken.
Yep.
So it does add added protection for your personal property that might get damaged as a result as well.
Something that's just coming to mind as you're talking and as we're talking about this, seen a lot more condos hit the market, a lot more condos being built.
Well, there's three, but the two big ones are Luma
Yeah.
on kind of First Hill
Yeah.
and the Insignia, which is
Yeah.
South Lake Union E,
Yeah.
kind of Belltown on the edge.
So as condos are being built, constructed, or rebuilt, or converted, if
Not too much of that anymore.
Not much of that,
No.
yeah. If there's a builder or an HOA president
Yeah.
that hears this, or maybe listening, or I introduce them to you, can you offer master coverage policy instead of, but in addition to working with individual purchasers on HO6?
Absolutely.
You can?
Yeah,
Okay.
and it's really important, again, for them to reach out to an insurance professional. A lot of people that will come on and be elected as a president of an HOA sometimes don't understand that insurance portion, what they're really getting into. So it's helpful to have that expert in your corner to let you know about the additional policies, like a directors and officers policy that can cover you as a board member making decisions with that HOA, package.
Never
Yeah.
even heard of that one.
Yeah.
I've never also been on the board of a condo,
Yeah.
so maybe that's why.
Well, I lived in a condo when I first purchased a home, and I can tell you what, the president and the secretary and all the people that hung out with her were annoying. Super annoying. I mean, more things on my doorstep, more emails, more mail than and I mean, so
You're
help me
selling
God.
the condo life
Yeah,
so
right.
well right now, Dan. Jeez.
No, but I mean, if I even took my shirt off prior to getting into the hot tub, I was getting a notice. I mean, they cracked down on it. It was crazy.
You got to wear your shirt in the
I
hot
don't
tub?
know, but you couldn't break the rules or do anything. It was just. But here's the thing. My point was, in financing these, getting a hold of people with that are managing the HOAs and on those boards. They're not super helpful. They get you what we need, but as far as advice or questions, you're on your own.
Yeah.
So it's important that if you're
Another
listening,
reason why you got to have an expert on your side helping you out.
Yeah, I encourage. Have a conversation with Tiffany.
I mean, as I think we pointed out pretty clearly, it is a pretty in-depth and pretty complicated process to have condo insurance and know that you have the right amount of coverage for both the master policy, which the whole association is covered by, or just your specific unit walls in H06 or whatever the heck it's called.
Yeah,
another acronym, Dan. Why
one.
we gotta have we've been saying it, but we need to have an acronym button. Maybe we'll ask them for that.
It's congruent with our industry.
I know.
So every client is going to ask this when it comes to insurance because the doggone big brands. I'm not even going to give them credit on the radio, but if you have the bundle policies and this and that. So is there a discount associated with an HOA policy or HO6 policy if they combine it with their auto or whatever?
Oh, yeah.
There is.
Definitely.
Okay.
Even some providers provide discounts if your HOA master policy is with the same carrier.
Cool.
There are some additional benefits, too. So,
any additional discounts or related to, security? You mentioned earlier that there was
any
a security...
home protection devices. So, alarm systems, fire alarm systems. If you have sprinklers in the unit, that's a plus. Any home smart devices.
Oh, yeah? Which ones?
Help. Yeah. So, I know there's some water detection ones out there. There's also Ring Doorbell.
Yeah, with the camera.
Yep. My company's
awesome.
just partnered with them to provide some additional discounts because essentially you're getting packages delivered to your door.
Yeah,
or
and they're
people
just
are
sitting
seeing
there.
if you're home. And if you've got that camera there to be able to talk to
Detect.
somebody as if you were home, it might keep from claims happening.
Well, one of the things I love about Tiffany and the Tiffany Palumbo agency, they protect your dream by making sure that you're adequately protected. Much like us, Christian, she takes an informative and educative approach.
I can't tell that at all.
No. Well, by educating you on your home, your auto, your business, and your life policies, there's a trusting, dependable relationship that's built. And Tiffany, I know for a fact that you can be counted on when you need answers, and God forbid something happens. Yeah. So if you would like to talk with Tiffany, she's always, like I said, she replies to text, she replies to my phone calls and my emails. If you would like to connect with Tiffany for a free insurance review, or if you're a builder or an HOA president or a real estate professional, just pick her brain and connect with her and use her as a resource.
Or even if you live in a condo association and you're like, holy crap, I didn't know that the master policy was such a big deal. Is it covered? Do we have the right coverage? I mean, reach out. She's here to help you.
Yeah. I'm going to give you her number right now, but it's all up on Seattle Real Estate Radio. I encourage you to contact her. All there. It's all there. She can be reached right now in the car, 425-967-3898. Reach out to Tiffany, pick her brain. She is a pro. Insure carefully, dream fearlessly is what she says.
Yeah. Well, thank you very much, Tiffany. You were awesome. I think a lot of people learned a lot. Yeah. So stay tuned. We got to take a break.
Seattle Real Estate Radio with your hosts, Christian Nossum and Dan Keller. Time for more Seattle Real Estate Radio with your hosts, Christian Nossum and Dan Keller.
Hello, and welcome to Seattle Real Estate Radio here on KKOL 1300 AM. It's time for Dan's Mortgage Minutes.
Teeing it up right away.
Teeing it up. I'm making you go. We're going to go.
We're going to go. So here's the thing. The Mortgage Minute today, I'm going to spend some time. I don't want to beat up the whole rates are low, but I'm going to tell you about. They are. They are. They're really low. It's anytime you see a drop in mortgage interest rates, I don't spend a bunch of time advertising how low they are. I try to talk to people about the benefit of a once-in-a-lifetime opportunity to lock in.
To work with Dan.
Well,
No,
that
just
is a
joking.
once-in-a-lifetime opportunity. Maybe,
No, it could be a
multiple
time.
multiple time in a lifetime opportunity. But here's the thing. Let's just be real right now. I can tell you one thing. When people ask me about rates and where they're heading, I can tell you one thing for certain.
Yep.
They will go up, and they will never be as low as this again. At some point, they will go up. They're supposed to this year. And with that said, now let's backtrack. If it were 4 years ago and we were down in the threes, which we were, everybody, because prior to that, it was 4, 5, 6, 7, 8, 9%, right?
Yep.
So this was like, oh my gosh, this is free money.
Yeah.
I'm telling you now, 4 years later, having been in the upper threes and low fours for this amount of time, the train's going to come to an end, man. The ride's going to come to an end, and it's going to be soon. So here's the thing. Whether you're thinking about refinancing, positioning your money and your mortgage for the future, whether you're thinking about potentially buying a home or buying an investment home, right now, this is the Mortgage Minute today. If you've thought about owning a second home or an investment home, now is a great time.
Yep.
Because you're going to make a bunch of money on that.
It's not going to be cheaper to do it.
Well, and what low rates do is it increases affordability.
Exactly.
Meaning instead of let's just not talk about max what you qualify for. Let's just talk about what your budget is. Let's say your budget is $1,800 a month for a vacation home. Where we're at right now with the low 30-year fixed rates or whatever rate you decide to go with or mortgage you go with, what it allows you to purchase is a lot compared
more.
to if rates were 5, 6, 7%.
Exactly.
So
a lot more.
Consider that. This week's Mortgage Minute is what are people doing with low rates? Removing private mortgage insurance, removing, paying off, taking out a second mortgage and paying off high interest debt, buying that vacation home or second home. So I guess I would just provoke you to look at that. If that's on your radar, now's a good time to revisit it. Now's a good time to call you. If it has to do with real estate, now's a good time to maybe pick my brain. Yep. Again, you can talk to either of us for free.
Yeah, we're not going to.
No obligation.
We are not people that pressure you to do anything. We're not going to put you on some spammy email list where we're going to bug you all the time. No. We're not even going to call you all the time. No. We're just here as a resource. Yeah. And if it makes sense for you to do something, we're here to help out. That's really how we both operate our business.
I tell people this all the time. I'm not one of those mortgage lenders that requires me to pull your credit before you talk with me. I'll have a conversation with you. I'll give you all the advice you need. Yep. So, speaking of advice, we have to talk about some of the things that we've got going on this month. I know I'm bringing you in as a guest speaker.
Yeah.
At a financial planning workshop. That's at the end of the month. I think it's on the 24th, 25th.
So that's just in a couple days.
Yeah. No, that's the financial planning one.
Oh.
So, yeah, it is actually in a couple of days. Sorry. I'm doing a couple. I'm doing another one on divorce matters, which would love. I know I haven't formally invited you to speak at that one, but
is that in March at some point or something?
No, it's at the end of February.
Yeah,
and same thing. It's I always like to host these for my clients or past clients or people that are connecting me on social media. But when you go through a divorce, how to protect your real estate, how to protect your mortgage and finances. Same thing with the financial planning workshop. We're bringing in a financial planner to just talk about structuring it, whether you're in your 50s, whether you're in your 30s, whether you just graduated college and you have a crud ton of student loan debt, what to do.
Yeah. So how the heck do you deal with it?
Yep.
What's the smart way to go about it?
Yep.
If you have a mortgage, right now with interest rates so low, it might make a lot of sense to somehow refi and wrap some of those loans into a mortgage.
Yeah.
So I want to go off on a quick tangent.
Yep.
So a couple weeks ago, Amazon did their treasure truck.
Oh,
Did you hear about that?
Well, I saw your Facebook post,
and
I was like, what in the heck?
What treasure
That's cool.
truck? What is that?
That intrigued me.
Yeah. So we record all of our radio shows on a GoPro, which is up here. We call it the Skycam. Hello, anybody actually watching the Skycam? No, quite a people actually view these things.
Goes to YouTube. Yeah,
goes to YouTube.
Well on YouTube. Yeah,
it's on the YouTubes. And so the first one that I had, we actually had some technical difficulties with it. It kept freezing up and stuff.
Yeah.
And GoPro was a little slow with their support getting back to us on stuff. And I was like, oh, gosh, how are we going to record the next week's show?
Yeah.
because we need the camera in order to record the show. And I only have a week, so they're going to be too slow to get back to us. So I saw that the first ever, which they announced that like last year that they were going to do one with paddle boards, and then the day of the event or the day before they canceled it for some reason. And there were rumors all around saying that it was because the city said they didn't get the right permits or something weird. I don't know what it was. Anyways, last 2 weeks ago, they finally had their first treasure truck announcement. And I got an alert on my phone saying, hey, this week, our first treasure truck, you can buy a GoPro Hero 4 Black, which is usually $500, $499. And it was $179.
Holy cow.
So I was like, well, that answers my question to wait for GoPro support to get me a new one or just buy a new one. So So I'll end up, I actually have a client that wants to buy the other one.
And there was nothing wrong with the other one. It was just this SD card, right?
Maybe. I don't know. But I'm going to send it into GoPro. They'll look at it. Apparently their support's actually pretty good. They're just kind of slow, like any company support. So once it's all fixed up, I'll give him a deal on it, and he can buy it for me and use it. He lives on, I sold him a house on the lake, so he's going to get the waterproof case and wear it going tubing, put it on his head and stuff, and it'll be fun. It'll be fun watching his videos on
that's
Facebook.
Cool.
So.
Well, obviously today's show was all about condos.
Other than the GoPro.
Other than the GoPro and and a couple of other things.
Yes.
But here's the thing. We were talking about some stats earlier, and I want you. This factors into condos because high density areas. So, talk to us about some of that census data that you used to discover.
Yeah. So census data is showing that for the first time in Seattle's history, we are in the top 10 most densely populated major American cities. So we just eked in at number 10, which is pretty crazy. So we've never done that before. So it's increased by almost 10% since just 2010. So 6 years? Just over 6 years. We've increased 10% population. Wow. We're packing 7,962 people per square mile as of 2014, which I guarantee it's higher than that now. Yeah. To put that number in perspective, LA's density is 8,383 people. So it's about 400 or more than us. So LA only has 400 more per square mile than us. But then San Francisco, they're leading the way with 18,186 people per square mile. So pretty crazy that we're eking into that, and it's just another point in the favor of Seattle becoming one of the top major cities in the country. Yeah. The economy is insanely strong here. Housing obviously is strong. And it's just beautiful. So all these things combined, Seattle is going up in value in not just real estate, but just people want to be here.
Stock.
It's beautiful.
Yeah, people just love the area.
Yeah.
I mean, obviously, you and I are both born and raised.
Yep.
We're from here.
Yep.
I'd never go anywhere else. This place is just beautiful.
And I mean, I've traveled a lot. I've been all around the world, and there's no combination that Seattle has: mountains, water, rainforest. I mean, it's crazy what we have here and how green it is and beautiful. And in the summer, it cannot be beat. So.
It can't be beat in the summer. And you know what else you can't beat in the summer? Salmon and crab. Right out of the Puget Sound. I had to drop that in there. It has nothing to do with condos or this show. I just had to say that.
Now I just want to eat crab.
Well, here's the thing. We'll bring some experiences out on the water onto the show in the next few months. Yeah, but they're actually catching fish out there right now. But I wanted to take a second. If you're listening to this show, especially a show like today that has so much to do with actually buying or selling real estate, share this.
Yeah.
Share. That's
if you
why
got any friends or coworkers that are looking at buying a condo, just share it with them so that they can get the education they need to make a smart investment.
Share the link.
All you're doing is just getting their education level up.
Yeah.
That's all.
That's all there is to it. It's better to be informed when you go into a situation like buying a condo. So, hey, listen, I really appreciate everybody who is listening in today. Like I said earlier, we're back every single Monday at 3 o'clock.
Yep, 3 to 4 p.m. You can stream us live on iHeartRadio, or you can always watch every single podcast or video on Seattle Real Estate Radio. So thank you very much for listening. We will be back next week, 3 o'clock.
To contact the show or for more information, visit SeattleRealEstateRadio.com. That's SeattleRealEstateRadio.com. And be sure to tune in again next Monday at 3 for more Seattle Real Estate Radio with your hosts, Christian Nossum and Dan Keller, mortgage expert with New American Funding, right here on Business Radio 1300 KKOL.